Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, well, let me welcome Nick Santiago, one of the better traders on our show. This guy has done some stuff. I've seen him pull some trades off that are less than 1/100th of a penny, and it's been like weeks in advance when he forecasted this stuff. So listen up. This guy's got some really, really good trades coming up. What are you doing, Nick?
Hey, Michael. Great to be back. Thanks for having me again. Right now we're looking at Google on the session because this stock, I guess, reported earnings a little premature, and the stock got roasted and toasted. I think traders now need to watch where this stock closes today. It closed below the 962 level, probably sets it up for a bearish trade down to the 640 area over the next couple of weeks. So I think it's going to be very, very important to see where this thing closes. If it can close above the 692 level, I think that Google has a chance to maybe find some support here and hold on for a little while. But this tech sector is actually looking very, very weak right now overall.
Well, I've seen it come back off of that look, if I get my glasses on, right about 680 level, come back up just a little bit. Do you think that this is a buying opportunity for this, if these supports you just mentioned hold, or maybe not yet?
No, not yet. I would not be buying this right now. In fact, you're going to have Apple reporting earnings next week. That will come out on the 25th, I believe, after the closing bell maybe. This time this was supposed to come out after the closing bell as well. But right now I just think tech is weak overall. I really wouldn't get in front of it. You're going to get a better buying opportunity on all these tech stocks just a little bit down the road and several weeks from now after this earnings season starts to fade away.
Okay, when you say several weeks from now, give me a better ballpark on that time frame.
I'm thinking more around the elections, right after the elections. I think that's going to be a better time to own stocks. Okay. Right now, the markets have held up extremely well, although earnings have been pretty lackluster, if you ask me. I think the markets are holding up basically because the U.S. dollar index has been crushed lately. The dollar doing basically a double bottom today before getting a nice little bid this afternoon. So I think you'll get a good chance to own everything a little bit later this year at a better price.
Okay, all right. Well, let's move on to Apple. Give me some numbers off of that.
Yeah, right now Apple is down about $12 today. As you guys know, when it was 700, I had told your listeners as well as my subscribers to play Apple down to the 636 level. We satisfied that target. Now it's all about pattern here. Apple does not seem to have a lot of strength, but the one thing I will say, the 622, the 623 level has held up like a rock as support. Once that level is breached with any kind of volume, Apple should head a lot lower. But that hasn't happened yet, and so we'll have to wait to see if and when it does. I think Apple immediately could go back down to $570 and as low as $500 if there's any break in Apple with conviction.
Okay. All right. Same time frame after the elections? Same
exact time frame. Right now, I don't think it's worthwhile to get in front of Apple because of the earnings that are going to be released on the 25th of October. But we'll know a lot more right after that time frame.
Okay. Now, your favorite bank stock, JP Morgan.
Yeah, JP Morgan, we bring that stock up quite a bit because it's such a good market indicator. And what it's telling us right now, the way it's holding up, is that there's really no fear out here. And without JPM really selling off in any bearish manner or with any real conviction or volume behind it, it tells us that this market is just a pullback and a slight, subtle correction that's taking place from the QE3 announcement, which happened on September 13th. Ultimately, you'll get another buying opportunity in this market.
Okay. Now, when you say this market, a minor pullback, you're talking about the S&P or the
S&P? Yes, I am. I should restate that.
That's all right.
But yeah, I'm thinking that the S&P is setting up as a nice pullback on the daily chart. I think this little move that we've had over the past 3 days, this upside move on the S&P 500, is really just options X game playing. As you know, on the 12th of October, the market closed below the 50-day moving average, the S&P 500, for the first time in quite a while. And that just had a lot of the amateurs out there buying puts on this market, and the institutions just ripped it up the other way for the past 3 days. But I do think the market will come back down, test that 142, possibly the 140 level.
Okay. All right. Yeah. Based on the futures, because I look at those a lot. You know, the 38% retracement off of today, for using today's high as the high, is like 1443. So do you see a shallow pullback and then another challenge of that 1460 level?
Well, I'm thinking that we're going to get a pullback on the futures, if you're going to look at that, to probably around the 1410, possibly the 1400 level. But there's just a ton of support around that area, and I think that's going to be ultimately a potential buying opportunity for everybody.
Okay, so this pullback could last more than a day, is what you're saying?
Oh yeah.
Okay,
this is not this market. I really don't even see any really major upside here until probably the election is over.
Okay. All right. Now, what about the U.S. dollar? You mentioned it earlier, and I know we got a little bounce today, but I'm not so sure that thing's got a whole lot of legs to it. What do you think?
Well, the dollar looks weak. I mean, it's now, if you're looking at the spot price, I mean, it's below the moving averages, which is never a good sign. The only positive you could make is that today you're getting a bounce above the September 14th low, which gives it a little higher low pivot. But that's really it. Other than that, I mean, the upside on the dollar is about 81, the 81 level on the U.S. dollar index futures. No more than that. I really wouldn't look for anything better than that.
I did a little homework myself on this market and the dollar market, U.S. dollar, and my numbers tell me that this thing could continue right into next year, late summer, with a bearish move on our hands with this thing, the way things are setting up. I wanted to get a feel from you on that because you're pretty good at forecasting this one.
Well, the way I'm looking at the dollar personally is that if we take out this low, the 79 level, which I believe is a very good support area, but if we do take out this level with any conviction, I mean, you have to look all the way back down at the 2011 lows, which are really around 72.70. Now, with that being said, we have not taken out on the weekly chart the low from September yet. And until that happens, we don't want to overshoot or overstate anything. But, yeah, it's looking pretty dire for the dollar at the moment. And I've been a dollar bull for most of 2012.
Well, but here's my point. It just gives me, because these are forward pricing instruments. In other words, we'll see a market move prior to getting the news that the Fed, in this case, that's where a direct relationship, is going to do anything. And to me, it's pricing in, if we break the lows, like you just mentioned, a lot more stimulus coming into the system from both the Europe and the United States than most of us had reckoned for.
Well, I believe we're probably in uncharted waters as we speak. Looking back at things, as you know, I was expecting a QE3 in the middle of October, and it happened much earlier. So we just have to really just look at the charts and dissect them, and they'll tell us everything we need to know, regardless of what the central bankers do.
All right, what about this TLT? The bond market, the interest rate markets are going to be a big part of our life as we go forward. What's going on there?
Well, right now, if you look at a weekly chart of the TLT, that still has not breached its September low yet. But I'm looking at 117 and even the 115 level as two key levels on the TLT. But, I mean, this thing just has ran out of steam. But ultimately, if the TLT falls too fast, that will tell you that interest rates are rising too quickly. And that's not a good thing either, because the United States won't be able to service its debt, and that will become a problem. And I think that's an issue that we're going to talk about later in 2013.
Well, I agree with you. Today happens to me, in my opinion, is a very critical day because we just crossed on the daily charts the 200-period moving average. Now, it hasn't closed yet. No, actually it did. The bond market on the future side just closed a little while ago. But we're below the 200-period moving average on the daily chart on TLT.
Yes.
I'm thinking there could be some bigger trouble. This will get really exciting as we go into elections with this market because the trend seems to be picking up some speed.
It does, and the TLT now is going to probably go down and challenge the 117 level. So that is going to be actually critical. And if you take a look at the 10-year bond yield, I mean, that actually has 190 written all over it now, 1.9%. So that's going to raise the price of interest rates on 30-year mortgages, and that ultimately, could be problematic. So I think this soap opera is just getting started again, and we'll have to just watch the charts. They'll tell us everything we need to know.
Well, it's going to put guys just like you, Nick, in high demand, because when this stuff hits the fan, people are going to be looking for the answers from the people that they've seen win time and time again. Before we go, tell us how to get in touch with you, how to get into the trading room and watch you pull these trades off.
Sure. Come over to InTheMoneyStocks.com. Take a 7-day free trial to our intraday stock chat. You'll see our screens live as we do everything every morning. Just today, Michael, we've I don't even want to say it. We've had about 7 winning scalp trades today alone, as well as we've been short Google. So, come on over. This Saturday, we're also hosting an In the Money Stocks methodology webinar. It's a 6-7 hour boot camp. You'll learn all of our methods, all of our proprietary methods. You have nothing to lose. Come over and give it a shot. And I tell traders all the time, just take your time. You could do this for the rest of your life once you understand it.
Thanks, Nick. Thanks for keeping us on the right side of the market.
Thank you, Michael. Have a great day.
You too. All right, everybody. Nick Santiago, President and CEO of InTheMoneyStocks.com.